Good evening, good evening. Welcome to our live Facebook. I hope my talk find you well and good. And it's only 2 more weeks to our Invest Fair, which we've been promoting to our members as well. Those of you listening to our website and also to our breakfast show, and as well as our Telegram chat room. So will be great, just great follow through. Also, if you could share this video in your timeline tonight. Thank you for coming, Tony, and thank you for all your good blessing in here. I do hope that I will see many of you in the upcoming Invest Fair, which we've been talking about it, and there are many talks and many events which is ongoing. So do come to our booth 25, as I said. But let's get on to our live talk tonight, something that I want to talk about. Now, this is pretty much a continuation from where we left off the last time on the US market in here. Now, my idea for this live Facebook was really much to an article which I got from Tom Lee, which is one of the fund managers in Fundstrat, talking about the potential of many so-called fundamental investors which were periodically selling at the high to beginning to buy on the dip. Now, I'm pretty much a real optimist or more of a bull in the stock market, depending whether you see whether you see crisis or you see opportunity, which is part of Beijing, that word I've been using the last few rounds. So this is pretty much the shift from there onwards. So for tonight, it's something that we're going to be talking on into this area in here. So we're going to be talking about buying on dips and selling on high, which is pretty much the theme in here. And I do hope that by the end of this 45 minutes or 40 minutes talk, you probably have some idea, at least, what is meant by buying on dips. Again, this is all going to fall back into your knowledge and skill of how much you understand the market. Of course, for many of you who has been following me for some time will probably know that what I've talked about is really in par with the things that we always teach about, which is the volume spread analysis, and also not to forget our Pentagon guide, our flagship analytic tools with our smart Robie stock idea generator, and also stock market analysis, expanding for exchange in here. Now, we also talk about the 2 different markets that we always talk about, and I've been advocating more and more of our user and as well as you to actually move over to the US market. And previously, you have not checked out the fractional investing in the US market that I did about 2 or 3 weeks ago, and also look at what is the underlying now, what's happening to the economy now. And if you understand the theme that we are talking about in here, perhaps understanding why the market is not where it's supposed to be. And then number 4, one of the things I want to help you is to increase your odds, especially those of you who are buying stocks on dip, with the VSA 360 in here. Definitely the insider buying activities, knowing who buys it, does they have here. And then number 5th one is where all the trading opportunity right now on buying on dips, and then probably we do a summary in the closing. So that will be the agenda for tonight, and I hope that you'll get it straight. Now let me first start off with a statement which many of you may have seen this earlier. This is about 2 months ago, and this is from one of the permanent bear, Jeremy Graham, and he is so confident, and he always talk about, or someone talk about how he predicted the Japan crash and the 2008 crash. He was only right 3 times. Okay, now next slide, I'll talk about also some of the so-called deception, or more of like a marketing pundit, what they do about. So he talks about 50% market crash starting May 1st, 2023. So far, we have seen beginning of 1st of May, the market has actually risen a couple of percentage in here. Crash unlikely. Okay, now some of these so-called fundamental value investor, they don't see the reality in the market, and sometimes I wonder why people still put money with them, even though they only write 3 times only. I suppose that's one way to know whether or not is to continue to follow some of the works they do. And of course, I did a talk on the 19th of April. Be careful when listening to famous guru. Check out that video. It's some of the things I talk about tonight in here. And sometimes that's why it's important. I always talk about here. People lie, charts don't lie. Even what I said tonight, very important, must always look at the chart. My basis of any of my so-called analysis of the market will probably be 60 or 70% based on the chart, and then going forward would be all whatever fundamental economic indicator, which usually you see every Wednesday night in all my talks in here. Now, of course, there are two sides of the story. On April 23rd, I talk about the so-called opportunity and also the Beijing. All right, so there's two sides of the story. We have a bear guru in here, and his name goes by Larry McDonald, and he says that in March 60 days, which is actually 2 months, by May it will crash. But it didn't crash. Of course, these people will continue, and of course, depending whether you are opportunity or you are a crisis guy who always look at the bear, I'm more of an opportunity guy. Whenever I see the charts agreed to what I say, this is so the guy I'm following is definitely up here. His name is Tom Lee. You can always from Fundstrat. He talked about a couple of reasons why the stock market is going, and I do see that he didn't get it right all the time, of course, right? But there are times they are right. And if he does align with things I use in the trade VSA, especially our Pentagon guide, then I will sort of go along with it in here. And one of the things that he said that are very important is know where are the opportunity are. And right now he see it early in May, and this was about a week ago before we get to the US debt crisis, which is right happening now here, which I will also update all of you now. So about a week ago, he talked about one of the top fund managers about where is the US stock at, and some of the analysts is asking, is it expensive? And of course he give his reason whether it is still relatively fair price. He used the words, and it can push S&P 500 right higher depending on the level of interest rate, which we did see. The next slide I have, which talk about the ongoing slide about the inflation. Now this is Tom Lee articles, basically just sums up how the S&P 500 are likely to break above the 4,200 level in here. Right now it is that resistant level, and it refused to break, and that's why we saw just above me here. Let me just get the laser pointer here, and you could see right now this is where we are. Okay, this is where we are here, and it seems to face a resistance at 4,200. He was spot on 4,200, but of course this is also pending, and we all know the US debt ceiling default, which everyone is worried right now. Just about 2 days ago, the President Biden and the House Speaker Kevin McCarthy was about to do some sort of talk, and then eventually yesterday they didn't have anything in agreement, and no meeting was scheduled, at least not until the final day of this month. So that's why the market is tanking, which means everybody is going to be playing who dare you, and we have something very similar back in May time frame in 2011 when President Obama was the president. So we also will be looking at what actually happened at that time. So what I'm trying to do is just perhaps to tell you the story. Should there be a US debt ceiling happening in here, and what kind of fall we had in the past, and maybe we can postulate what happened in 2011 where they had that very short default, and what's going to be happening right now in 2023. All right, so this is where funds are saying that on the basis where the market can break 4,200, and I do personally believe this is my basis, if the market can break above the 4,200 level in here, then there'll be more institutional and more investor buying on dip. Of course, when the market goes a bit lower, that's where the dip is, and that's what we are talking about, rather than selling at the high in here. Now, if you look back, the buying on the dip, right? If you look back on the VOO, which is the ETF. Now take note, this is the ETF for S&P 500. If you ever bought it, I have this stock VOO. You can see there were only a couple of occasions, especially in 2020, where we have the COVID-19, and then the market really, after falling back, they simulated the economy in here, and then they have a pullback. And this is what we call buying on dips, where we have gradually usually about 2 months, some 2 months, some 3 months where the market pull back. So you can see here, this is from VSA 360. You can see how much the market actually pulled back, and we are talking in the percentage of 6.5%, 2020, then we have 5% here on 2021. Some of the biggest pullback that we've seen, usually we want to have 2 months, okay? This is about 13% in August, and then we have another 3 plus 5, 8%, another 8%, another 8%, and that's why we ended up this is, of course, many of you may aware, in year 2022 I have talked about in the past live Facebook about the 4th session of 75 basis price hike by Jerome Powell to tackle the inflation, the high inflation. As such, this is also resulted from the Russian-Ukraine war, and that's why we see a minus 19%, and especially in the month of June, that was the bottom, and that's where the market, the bottom of the market, and then the market did rally back, another pullback. So we have seen in January a nice rally, February a pullback, March was a good one, April was a good one. When we come to the month of May, it is right now 0.4% return. Who knows, month of May, you could see from here, it's always been positive return. And when, of course, if they can settle the so-called disagreement between President Biden on the US debt ceiling, then very likely we will see a positive May. But right now, I don't see any possibility, because any of the meetings they will have between two of them, the House Speaker Kevin McCarthy and President Biden, will likely to be the last week of May, and of course the Secretary Janet Yellen did say that if nothing be done, likely the first week of June 2023 will be US default, and that gonna look pretty bad, and this is the kind of scenario that I want to point out to those of you who tonight. So this is the Wall Street. Now let's turn our attention to Wall Street, a little bit back of history, and you could see what I've talked about earlier. Let me just switch to a laser pointer, where we have year 2020, we have a lot of what we call those 2 down months, like 5 or 7, and those are actually buying on dip period. You can see this is also due to the at the time the federal interest rate hike was pretty high, 75 basis point, which is 0.75 basis point in here. And you can see, as well as when they slow down that interest rate hike in December and February, that's where we see the market started to pick up. And of course, now the issue is turned to the US debt ceiling in here, okay? And if you look back, one of the reasons why the interest rate is pretty much something on the back of our head is because you can see the inflation as of end of April is 2023, and like what I said in the previous Facebook, I do think that the inflations are coming down, right, at this level in here. So the focus now is shifted to the US debts, not so much on whether they're going to raise interest rate, because we have seen the last occasion when they raised the interest rate, we saw the banking crisis. We did see the bank sectors completely, shut down. We saw the Silicon Valley, then we saw the First Republic and couple of banks inside here. And of course, many of us thought that, they are going to be seeing another crisis that they saw during the 2008, which I did stated out that this is kind of different, because this is only restricted to the smaller and medium term community banks, not so much the too big to fail banks like JP Morgan and Bank of America and so forth. All right, so right now, if you look at the Federal Watch interest rate, the likelihood of interest rate rise is very low. There is a 67% people, and you can go on, just type FedWatch interest rate on your Google, and you probably come to this website and check out. So this is updated every day on the analysts, what they think the interest rate is likely going to go up or go down. So right now, 67% of the analysts out there is thinking that the interest rate, right now you can see current interest rate target is 5.0 and 5.25, and 67% of people believe that it's pretty much going to stay the same, and 33% of the people would think that there's going to be a 25 basis hike. When is it? All right, when? just look at the top here. You can see this will be on the 14th of June. So 14th of June is this date in here, which is about maybe 2 weeks ahead in here. But of course, the focus not so much on this, is on the US debt ceiling, which is the next thing we're going to talk about. Now, the US debt ceiling deadline is the 31st of 31st of May. As such, June 1st will be the talk. So they're going to be zeroing in on some sort of agreement between the Democrats and the Republicans in here. Nothing has been reached so far. So they are playing like I dare you, you dare me kind of situation. And it's going to be pretty much down to the last minute. So if you're going to be following this US market either on Bloomberg or on CNBC, this US debt ceiling is going to be recurring every half an hour, until we settle this. But if history is any good teacher, then we will know that the market likelihood to sell down, I mentioned a sell down, turun, and then later on resolve it. And this is where I talk about the buying opportunity, because I do think that US being the largest economy, GDP in the growth, and also President Biden did make a statement that US will not default on its obligation, which is on this debt. They will continue to service the interest rate rise in here. Of course, many of you will be saying that how can US afford 31 trillion debts in here, and that's will be another topic for another day for that one. So if you look back on the last time where they have this US debt ceiling default was 2011 during Obama time. And one of the reasons why you could see this is actually from Wikipedia. There was, if you look in, every year the debts will continue to go up. And of course, during Obama time, we have the financial crisis. That's why the 2008, you saw that debt actually shot up. No presidents ever since the Reagan days will have or trim down its public debt. So that's a fact. For sure, right? That's a fact for sure, where unlikely. So this is where 2011 where May they saw these debts hitting at that time about 14 or 15 trillion. Right now it's about 32, 33, depending the amount, which is still climbing. So you look back on that, just a series of 13 years, you can see this debt has really shot up a lot more than it is. And if you look back history, and this was the period. And you can see from my chart here, just draw you how much was that pullback. And you could see by the first week of June, they did not settle on that. Then sometimes they have a little bit of pause saying that they agreed something. Then the market actually, and have a pullback. This is where the market dipped about 7% in here. I'm going to show you next where the market is. So 7%. Right now, the market is 1.7% as of yesterday. So I'm not sure going forward how much we're going to be seeing this kind of sell-off. This is a weekly chart. You can see, right? Even in the month of coming in, and you can notice that the last 1, 2, 3, 4, the last four weeks of May was really a sell-off. We didn't have it this round, so that was something nice. And then the market pullback. Of course, eventually there was something going on. I can't remember 2011 what happened, but I will show you a bigger chart. Eventually, the market actually Dow Jones, that was around 12,000. Remember, right? And Dow is around 33,000 since then. And of course, at this point, this is another buying on dip opportunity right before the market actually shot up in here, right? So for those of you who are trading the shorter term or looking to buy something longer, this is actually a good opportunity right now to buy at the lower price. So remember, there were two periods where the market fell, and the first one was the sell-off, and then there was buying on dip, and there's another sell on high in here, coming down, buying on dips. But do take note, what I mentioned before is likelihood if S&P 500, according to Tom Lee, if the market were to go up above 4,200, then we'll see there will be more period of buying in here. So let me know what you think. Give me a thumbs up in here, some of these information that you agree in here. All right. Now, this is where right now we are seeing on the Dow Jones, okay, on the Dow Jones in here. So you can see from here, this is a weekly chart. All right, we didn't have the big sell-off that we had previously that you see in the June, selling off into the June. So let's go back a bit more. I just want to go back here. You can see on this June here, you can see, right, coming to the last week of June, you have a spring here, then the market just sort of break down from here. Okay, so right now you have this. Again, it's maybe possible. We have this sell-off in here, and you notice this is the 200-day moving average. It's still holding about, and this is where it actually hovered down. So right now we can see the 20 and 40 was actually rested here. You can see here, right? So it did rested on the 40-day of the 40 weeks moving average. So you can see here, this is the 40 bar moving average. It will definitely test this. Whether you'll break down, it's yet to be seen. But if there's a big sell-off, should it default, you still have this 31,000 level that will hold it in here. Now, buying on dips, we have to see going for what is likely to be agreed maybe end of the week. So right now it's still remember, it's still not the right time to buy, right? Not the right time to buy, because we will probably see a bit of sell-off that you see here. Okay, yeah, that's right, Hanji, all damage already, right? So right now there's some opportunity there. Now overall, if you look at the overall echo space of things, going forward from 2021, right to 2023, the market actually went up 300% in the last 14 years. Okay, so if you're investing in the longer term, that's not really a big problem. But if you are trading in the shorter time frame in here, take note, the market may pull back 5 to 7% before pulling up in here. So we can see, of course, along the way, there'll be lots of this so-called very sad news, very bearish news in here, something that will shock you, just like what Jeremy Graham said, the market will fall 50% in here. The whole point of us as investors, especially those who are in the longer term, or some of you who trade it, we need to be very so-called receptive to those headlines that we see. Then we can act it, we can look at our charts, use the Pentagon guider in here, and then find some sort of decision to look from there onwards. And that's always been some of my lessons, and I do hope that this is something that you will get carried away. Now let's bring our attention now to Malaysia. As I said before, different market, different result. All right, different market, different result. And on the Malaysian side, the GDP growth definitely has come down a fair bit. If you look back 2020, let's look at the real GDP growth here. The first line yearly, then we compare to the quarterly. Yearly first, then quarterly. Yearly, we have, of course, we all know 2020 was the COVID-19, the crisis fell 5.6. Then 2021 we recovered back, and then 2022 was a good year, right? 2022 was a better year, but yet the stock market fell. And now what we have seen for Malaysia, we have already 5 months of negative return. January, February, March, April, and May. Our KLCI negative return. How do I know that? You look it through the VSA 360. Now, if you have not got hold of the VSA 360, you can try out our 10-day trial, or some of you who have subscribed it in here, and I think that those information will be very valid to you. So if you look back on the second quarter of 2022, this is from Bloomberg, a courtesy thanks to Interpacific. You got third quarter where the market go up 14, then fourth quarter actually came back to 7.1, and right now it's even shrinking. So that's also explained why our KLCI market hasn't gone much, because you can see the first quarter of 2023 GDP had come down. And many of you may have known, a lot of our time, our market economics is very tied to China market. And when China reopened after the reopening of the COVID-19, they thought they will rebound much faster. But we have seen the last 3 years of lockdown on and off in China. The China that provide the gigantic growth for the global is not there, and everybody was saying that China will be there to rescue everybody, because China will buy more coal, buy more petrol, buy more electronics, but it's not happening. Of course, many also know that there's currently a chip war between US and America, and America with its ally are limiting some of the advanced chip to China, so they don't want to build their military, and this is ongoing. So if you look from here onwards, many of those GDP in terms of their sector all has slowed down. All right, you can see from here 0.9, worse off than last month, 2.4, 6.3, manufacturing 3.9, period last quarter, now 3.2, turun. Construction also turun. Service also turun. Domestic demand also turun. Private consumption 7.3, 5.9 also turun. Public consumption lagi teruk, actually went to negative growth. Our government not spending money. If we really rely on the government to spend money, so they're not spending money. Then public investment 6 to 5.7. Private investment, sorry, I move over this side, okay? 10.3 to 4.7. So you can see, people are not investing anymore, okay? Because I think the inflation has really caught up with everybody. If you agreed what I've said in here, so this is why the economy really turned for the worst in here. And of course, if you look at our VSA 360, we have the foreign fund flows, and every time foreign funds really flow out in here, that's where the market actually fell off. We only have 1, 2, 3, 4, 5, 6 occasion since in May that there were foreign funds buying. Most of the time they were selling, right? And also this is also due to our largest trading partner, China, hasn't been doing its work, really buying last off in here. You can see even with the flow of the Chinese tourists to Malaysia has been somewhat lackluster too. We were expecting more Chinese tourists to come, but right now we are only getting those who have the buying power that is coming to Malaysia, and of course Malaysia is one of it. Now let's talk about the KLCI market on dips, on pullback. Okay, how much of the dip? We want to be looking at the monthly return. So you can see, like US, we have 2 months, Malaysia actually 3 months. You can see 3 months of dip here in 2021. 2020, that was the year where they actually rebounded back after the COVID. This was a nice COVID return. Then we have the 2022 was the worst year. So you look back at the KLCI, we have only one positive year, 2017, and since then the market has been lackluster. And even if you look back in 2020, it was only the last 3 days of the KLCI where actually the market pushed back, and since then our market really been moving sideways. So on the longer term, our market tend to be a very trading market, ranging between support and resistance, and that's pretty much it. Of course, there are some sectors, if you look at it, will be those mid-cap stocks that have been played around by syndicate, and that's one way we want to be playing that, buying on dips. I'm going to be sharing with you one method that you can use to increase that odds. Just stay on with a couple of minutes in here. So you look at KLCI, buying on dips has been very less success. You can see some of the pullback, you can see here, is close to about minus 10.7%. All right, 10.7%, and the market pullback. Then we had another one where Anwar, became the prime minister. That was a big move, and then you can see another pullback, and then it retested again, break through the 200 million, and then pull back another 8%, gone up. But since then, it just sort of moved sideways. And one of the reasons, if you see this, on from April, May and June here, this is actually due to I believe the GDP figure that I shared with you before, that has dipped much low. Remember the first quarter, it's already over. So we're going to be waiting for the second quarter. First quarter is January, February and March. Now we are up to May, and that's what is reflecting. Of course, if we see the chart break higher, retest back the 1450, then we will probably see a better second quarter 2023, right? But right now we're not seeing those. So the stock market, remember, I've said before, it is a leading indicator and it tends to move ahead of our time. So buying on dips, so much more of a support. If the market were to come back around 14, I do think that 1400, it's a good level. It probably hold its level in here before the market pull back up. But right now, like many other stocks, they're all affected by the US debt ceiling default crisis in here. Now, I'm going to talk about the insider buy and sell guided chart that we have in our VSA 360, just to show you some of the things you can use to increase your odds. Now, the methodology, as I said before, buying on dips works very well with the VSA buying, which means we want to see evidence of insider buying, right? So insider buying, and then with the VSA setup, you want to make sure that you can actually buy on the yellow trend zone where there is a support. You see signs of strength in here just before it turned green Pentagon, and that's where you want to be buying. And of course, some of the stocks that you are looking at have fundamentally sound, 3 out of 8, but some of them, I do see many of these so-called penny stocks may not have the kind of fundamental, because most of them, they are not profitable yet. So that's why insider know about this and started to buy. And of course, because remember our KLCI hasn't been really going up, but these stocks has been moving up nicely in here. And sometimes, in my opinion, it also defies the logic, because they may not have the fundamental justify why the stock should be this high. But guess what? Insider are buying. Okay, let's take a look at one of the first example in here. And of course, those of you who have VSA 360, little bit of the legend. Every time you see a blue here, it's a call to buy. The black is call to hold. Of course, a call to sell will be a red color in here. And then your buying is green, selling is red, and then you have other transfer and also bonus issue. So those are the legend that you see in here. And the first one is Chin Hing. So you can see Chin Hing was very good. It actually moved from $2.70 right back in September. And of course, why you could see many, they will only call to hold the black one here. But other than that, just let me move out of the way here. Okay, and you could see there are continuous buying in here. But take note, usually when you see the yellow trend zone in here, now this is very important, right? We only want to see a slight period of yellow trend zone, not too long, okay? Because if it's too long, means the buying momentum, the buying on dip is no longer there. Because some of this smart money, they're on certain loans, so they have to continue to buy it to really pay for the collateral. If somehow the prices dip below, they're using the stocks as collateral, and they have to top up. So that's why it's important they continue to push up. And of course, when they push up Chin Hing here, the market hit up here, when you see those double top at this level in here, guess what? They will take profit, and then market dip back in, they'll buy back again. So you can see from here, they probably buy more here, sell here, and buy more here. Now, of course, there's no selling in here, and I was wondering how they I managed to hide this. Perhaps I have to do a bit more research on this. But right now, you could see, I do hope that coming soon, Chin Hing will turn green Pentagon. And actually, Chin Hing did turn green Pentagon. You can see here. You see this one? Right at the below here, it actually turned green Pentagon. So it is moving like intended, which means it will push the bar higher, sell a little bit on the high, come back down, buy on dip. But take note, this yellow trend zone here is buying on dip, and you can see lots of this buying, and this is really a very classic example to look at. Now the next one is PPJ, which is Pajak Gadai. It's one of the listed Pajak Gadai stocks inside here, and this is a very good case study. It didn't attract my attention until it dipped back to the 50-cent mark here. Now, of course, once listed here, right, it went over to 56 over. So there's lots of buying in here. And after when it bought it, the market pushed back up, and you can see again, same kind of thing. And like I said, just on top here, each of the yellow zone lies an opportunity to be buying on dips. So if you were to get it right now, and within, let's say, 2 months, that yellow trend zone, two months, I think, 1.5 months and 2 months, it doesn't go anywhere, that's a stock you want to cut. But if it does move up, it's quite favorable too, because we do see some foreign funds, let me just move out of the way here. You can see right now is the insider. Now, if you have not got the VSA 360 insider buying, this is definitely one of the special proprietary chart that you don't get it anywhere else, and it's only on VSA 360. So if you have not tried out our 10-day free trial here. Okay, so next we're going to be looking at as taking caution when you see selling. All right, we can see this selling in here, lots of sell right at the top in here. This is 9 lakhs, and lo and behold, we know that market. So again, we said before, if the market were to pull back, normally within 2 months the market will have to shoot up, but this one is taking more longer than 2 months. We get up to April, and then the market sort of boom, break down all the way down. So it's time to exit here. So avoid that cluster of insider selling. Here's another one is Pelican. You can see Pelican, many occasions of buying, but right now you can see there was some selling in here, and to me it's a bit high. There isn't any more buying. I'm sure you can't see it here. There's some buying in here. There definitely more selling over on this side in here. So you need to be kind of very careful in here. All right. Of course, things are much clearer if you have the VSA 360. Again, the yellow trend zone previously is an opportunity to buy, but right now at the top here we have to be a bit careful where it is in here. And of course, if you want to get this Pelican in here, if the market doesn't push back up, in a span of 2 months or 1.5 months, then it's time to exit those trade in here. All right, so my take is that it should turn upwards very, very soon. So wait for the green Pentagon if those of you on this Pelican. So let's look at the summary, what I've talked about in here, right? This is sort of the summation of other things in here. Pretty much like the chart, what you see inside here. The market continue to go up. It's actually a stage 2 markup, a stage 2 markup, part and parcel of the VSA methodology that we teach. You have stage 1, stage 2, stage 3. So there is a pulse, right? It is a pulse, and that's actually point number 6. When there's a pulse, part of the markup continuation, point number 6 is that we have a period of what we call pullback. It's on the yellow trend zone, very short, less than 5 to 8 weeks. Okay, let me just move up here. Yep, there you go. 5 to 8 weeks, and the stock should turn upwards after that, the 5 to 8 weeks. And if it doesn't continue to go down, that's when you want to cut loss. Because if you have the backing of the strong insider buying, that's great. And of course, we want to use the visual confirmation to look at the support and resistance in here, looking for sign of strength, sign of weakness with the VSA pattern, and paying attention to the green Pentagon, right? Just like we're saying that eventually the market will pull back into the yellow trend zone. That's where you think to be buying in here. You can buy at the yellow trend zone, but take note, within 5 to 8 weeks, right, that yellow trend zone after the red Pentagon, it should turn back up. If it doesn't, it's time to cut loss. Can I understand? All right, can I understand this one? Give me a thumbs up right here. So that's the VSA trading method, buying on dips. Make sure you get the strong insider buying to back you up. That way you know that this is the stocks that you want to buy in here. All right, so if you have any stocks, those rather than looking the one that I have here, if you have any stocks you want me to look at, feel free, give it to me now. So we want to see whether there's opportunity of buying or not. So I'll use the VSA 360 as well as the chart here. All right, I'm just waiting for you guys. Do give it to me, and I can show you whether there is buying opportunity or not. All right, let me know. If I don't see any example of buying or opportunity, I'm just going to move on with my slide. Okay. Okay, these are something on your own. Okay, we have one, Ta'an. All right, so we look at Ta'an. We'll probably do one or two. All right, because due to the time. Okay, let's look at Ta'an first. Okay, so if you look at Ta'an, first of all, it has to be uptrending. Okay, so uptrending. This is a downtrending. You can see here. So this is the uptrending is over here right now. Remember, right, what we have said, the yellow period has to be very short. So which means Ta'an, like it or not, it's not and buying on dip. It's even if you buy, it's actually sideways market range bound. It doesn't qualify that. All right. So when you look at the rules I've shared with you earlier on, go back to the rules, right? It has to be in a stage 2. This is in a stage 1 accumulation. So it's not buying on dip, unfortunately. Let's look at the next one from Amanda, Hexstar, right? It has to be a chart that is going up. So this one you can see up here, right? We have you can see the yellow trend zone, it stretches more than 2 months already. So this one is already broken that buying momentum. Then after 1 week broke, you see it couldn't go up anymore. Again, this is actually range bound. Right now it's more of a trade. It's not really buying on the pullback in here. This is actually moving in tandem with the overall rubber glove stock. So you want to be trading these stocks, okay? So if you get in on a green Pentagon and buying up, but it's not part of long. And of course, you also want to check, if you have not, check out Hector, whether the foreign, whether the insider buying, not Hexstar. All right. Okay, let's look at this. The buying in here, yes, you have some buying along in here. So this is a sell-off here, so we do adjustment for Hexstar since the chart has come down a bit, but definitely you see there were 7.2 million, 36 million, 36 million, 36 million. This is 7.2, 29. So it's a bit like moving left pocket to the right pocket here. Quite kind of interesting to see where the mark 25 million, 25 million, 27 million. So it's moving between the company and himself. So a lot of buying and selling, but the net effect is important. But right now we can see some insider buying. So to me, it is part of a sideways market, not so much of a stage 2 trend. If it does see a stage 2 trend, that would be great. Okay, so I'll make a note then we'll ask the people to do the adjustment for the hectare stocks. Okay, so those are the two, all right, for our Malaysian market. But I also want to bring your attention to the US market here, because right now we do see a lot of opportunity, and due to the US debt ceiling, some of these technologies like Microsoft, Apple, Nvidia, and Tesla, and also Nasdaq has buying opportunity. Most of these stocks, MST, AAPI, Nvidia, are in green Pentagon. Okay, they will pull back very soon. All right, so when they pull back, just remember the market gives you that opportunity. Let's look at the first one, Apple here. So you can see Apple. This is what I've talked about, like Ta'an and Hexstar. They're not in a nice uptrend. You want to have them in a nice uptrend. So when there's a pullback, that's where you want to be buying. Else it's just sort of a sideways market triggering up and down. So right now you can see here, right? Let me just bring it down again. This is where Apple is going to turn red Pentagon very soon. All right. Once it turns, it's going to be pulled back over here, and how long we are looking for? That market will turn yellow trend zone for 5 to 8 weeks, and that's when you want to be getting in. So be prepared, because why we are saying that? Because we still got 2 more weeks going into the 31st of May, which is the US debt. They haven't settled yet. So if they were to settle end of the month, then you still got another 2 more weeks of this kind of market where volatility will be there. So that give it a bit into middle of June. So that's where likely you will see Apple turn back green. So right now, I think Apple will go through some pressure of selling coming down in a line with the US debt ceiling. And like Microsoft, okay, they are all very, very similar. So that will give you some sort of plan going ahead. So you can see from here, all right, one more sell-off that you see here, you're going to be getting a red Pentagon. And for those of you who don't have this VSA 360, check out using the Smart Robie chart. Right, the Smart Robie also have this chart in here, and they are real time right now tonight in here. You can see there's a pressure of selling it right now. Okay, and this is the kind of condition, the market condition. Nvidia, Tesla will also be the same. All right, so I don't take too much of your time. So how do you buy on dips? So let's sort of get down to the summary in here. I know there's more shares I want to share with you in here. Do a bit of your research, like the chart and those I've shared with you, and also you can watch back this video, some of the VSA trading method. Use those and research some of the stocks that are. And when you buy them, it's going to be very bearish. So don't be overly overwhelmed by your so-called emotion in here. And know the VSA setup, know your reward and risk. So when the market starts to turn red Pentagon, you sort of time between 5 weeks, 8 weeks, you turn yellow trend zone. So that's where your support and resistance is going to be, right? And that's one we. So you have to see sign of strength, sign of weakness, a bit on that. Just wait for the green Pentagon. Can understand this one? If you can understand this one, give me a thumbs up. Not that difficult. Very simple things we want to teach you guys. Okay, and then finally, and you generally want to keep it for longer term, medium term. And if you look at Hexstar, all these are very short term, because it is in a stage 1, so it can move sideways and then slam down, go a bit more. You want a stocks that is moving up, part of a stage 2, where you have a slight pullback. So in a period of another 6 months, it will even go higher in here. So keep a medium long term to that. All right, thank you for your audience for that one. All right, so we come to the announcement in here, our Mid-Valley exhibition in here. I do hope to see all of you on 3rd and 4th of June in here. And our theme is Grow Your Manila on the 3rd and 4th in here. One of our gold sponsor, and you can check me out. And I'm just below Rafizi Aziz. So very close to him. So feel very proud to be along with them. Of course, there are many other speakers in here on the Invest Fair. So hope to see all of you in here. We'll be co-partnering with Macquarie. If you do be there on the either 3rd or 4th, come over to our booth and say hello to me. All right. So that's all we have. And okay, don't forget, we'll be also be promoting our Smart Robie in here. Check out the S&P 500, SGX, and Hong Kong. We have the Robie FA list. So for those of you who are looking to invest in the fundamental stock, use those in here. And of course, if you want to find out more, on June 3rd, we have our helpers who explain and probably do some sort of tutorial training for you if you are interested in coming in here. Bring your loved one, bring your children, bring a friend along in here. All right, on that day. So for summary, so basically what we are trying to say, buying on dips it is the right strategy for the US market. But for Malaysia, as I said before, even those two short examples that I've talked about, Ta'an and Hector, they are in the range bound, so their support and resistance is better. Means you buy on the support, and when you have a small percentage in here, you better chop out first. And of course, it comes better if you have the VSA 360 insider buying in here. And of course, I do suggest to many of our members and friends to actually diversify to the US market and stick to the technology sectors, because once they get over with the US debt ceiling, you see the market dip back down and start to move back up in here. And for those of you who do not know much about VSA system timing work, check out our video that we have in here. And I do know one of my senior trainers, Zach, will be doing a course trading in calm waters for a very small fee, very reasonable. It's very affordable in here. You might want to check out here or go to our website and register for our one-day course. So actually, it's a one-day course but spread over 2 weeknights, and we usually do it on Monday night and Tuesday night. That's a very good course from our senior, and you get the chance to use the VSA 360, I believe, for a very short period as a trial. It's a very small fee, all right, just to cover our course in here, and more importantly, really learn about how the system works, which in your favor. And something to share with our fellow members, I've done a bit of a back testing for our Pentagon Guider portfolio back testing. It's a methodology that we have with all our rules in here. So for year 2022 and year 2021, the result was not too bad. It's about 18% returns, and 2022 was 30% return compared to the KLCI was in the negative territory. So for 2021, we are minus 1% compared to KLCI minus 5. Again, these are back testing, and I'll be showcasing this on the next month for our orientation training. If you do come for our trading in the calm waters, then I invite you to our monthly orientation on the second Tuesday of every month. All right, so we'll be checking out how to use the portfolio backtesting system in here to improve your performance. All right, so that's me from here signing off. Thank you for your support, and thank you for coming tonight. I don't want to keep too long of your time, but do check out some of the stocks I talked about those earlier on, right, and see whether they fall into it, and do watch this video back so you get a better understanding of what's into them. So that's all I have for tonight. Any question, do let me know, and do join our Telegram or spread the good words around to your friends so they can also pick up a lot of great messages from the Trade VSA Telegram website in here, and also Telegram. That's all we had. Thank you again. I hope you all learned something, and it's been a pleasure sharing my knowledge with you. Thank you again, and I do hope see you in Invest Fair.